madlang bizomshaya.
Okay.
Okay, you're on this provision for bad debts. Remember that normally for provision for bad debts, you have to calculate it by yourself, right?
Yes.
You have to calculate it by yourself. But then the situation, they already calculated you provision for bad debts. Easy thing. When Tina, we are not going to read that English that they use. I even failed English during my high school years. So let's forget about English. So they already calculated provision for bad debts for us. So meaning there was no need for us to calculate it. So we go to the second step. The second step, that's where we compare. We know that if you have provision for bad debts that appears in your trial balance is more than the adjustment one. If the trial balance one is more than the adjustment, you are going to record the difference where you are going to record the difference under your income.
Yes.
And then vice versa. If ever that adjustment one is the bigger one, we do vice versa. So adjustment provision for bad debts is 10,408. So let's go check the one that appears in our trial balance. Oh, what was the one that appeared in our trial balance? Oh, it's 13,050. Trial balance one is 13,000.
7.
Yeah, it's this one. Trial balance
Yes.
one is 13,050. So you can clearly see that the trial balance one is more than the adjustment one because the one in trial balance is 13,000 and then the other one in our adjustment is 10,000 rand. So therefore the difference we are going to record it under our income. Under our income. So let's check the difference between the two amounts.
Okay.
So we'll say 13,050. 13,050 minus 10,408. So the difference we'll record it under our income. In our income, you should have an item called provision for bad debts.
2,570.
We call it provision for bad debts. Bad debts adjustment. You said that you found how much? 2,000.
2,570.
And then in the brackets, you just write the calculation. Which how did you get that 2,570? Can we say 13,015 minus
Minus
10,000?
10,000.
Let's go check it. Is it 10,408?
Yes.
10,408. That's correct. And then let's check the second transaction. Interest on fixed deposit was earned at 8% per year. This one is similar to the one that we did. How about this one? Interest on fixed deposit was earned at 8% per year. Take note into account that the fixed deposit was increased by 30,000 rand on the 1st of September 2021. This transaction was recorded. So to calculate our interest on fixed deposit for the current financial year, it's similar to rent. You have to calculate interest before an increase and also after an increase. This one, let's just attempt it individually. And then when you say after 2 minutes, we'll just cast our answers. That's for 2 minutes. If ever you want me to scroll up in your trial balance so that you can see your fixed deposit amount, you'll just notify me. Mahlangu, should I scroll up for? Okay, let me scroll up so that we can check the amount in your trial balance. You're still attempting it, right?
Yeah.
Is it difficult? Perhaps, maybe tricky? No.
I,
Firstly, did you drop your financial year to analyze that transaction?
yeah, I did.
Did you calculate the months? How many months was before increase? And also how many months was after increase? Because that's the keyword. Let's go step by step so that we can see it. As I said, that it's similar to rent. The keyword, the key in which you can succeed with it is to drop your financial year. Let me show you. Kind of when does our financial year begin? Masangu?
Sam.
When does our financial year begin? That one is them. So it begins on the 1st of January. Okay, let's read our transaction again. Interest on fixed deposit was earned at 8% per annum. Take into account that the fixed deposit was increased by 30,000 on the 1st of September. Just like rent, as I've said, 1st of September, you will highlight it. We increased our rent by how we increased our fixed deposit by how much? By 30,000. So our fixed deposit increased by 30,000. So that's what you know. So I said that you calculate the months before you increase your amount and also after you increase. Obviously, after it will be this month. It will be from September up until December. It will be from September up until December. How many months is it? From September to December? Is it 4 months?
Not, yeah, 4. That is 3. 4.
It's 4 months. Before an increase will be from January up until August. So it's 8 months.
Yes.
So the transaction says that it was recorded. This transaction was recorded, meaning after we increased our fixed deposit, we recorded the transaction. Let's go check our fixed deposit here in our trial balance. Fixed deposit. We have fixed deposit there. What's
Yes.
fixed deposit? How
It's
much is it?
2,200. You can't see it.
I cannot. Oh, not like interest. I wanted a fixed deposit.
Down. Go down. Go down. It's 2,200.
That one is interest on fixed deposit. I wanted us to look for the initial investment that was made.
Oh. Okay.
I think one of the reasons in which they provided us with that transaction is to calculate the actual one. Maybe that one, there's still an interest that is accrued. So what are we going to do here? We are going to calculate the interest on fixed deposit for the year. The total interest that was supposed to be recorded. So in our thing, our fixed deposit at the end of the year was 55,000 rand. It was 55,000. So at the end of the year, we had an investment of 55,000. At the end of the year, we had invested 55,000. So remember that for them to get the fixed deposit amount at the end of the year, they set the fixed deposit at the beginning, plus what? Plus that 30,000 rand, plus an additional contribution of 30,000 rand, and then they got 55,000. See, they said at the beginning plus 30,000, and then they got 55. If ever you want the beginning one, you'll do vice versa. Vice versa meaning 55,000 minus 30,000. When you say 55,000 minus 30,000, you'll get the fixed deposit amount that was invested at the beginning of the year, in which I think is 25,000.
Yes.
So at the beginning of the year, we had invested 25,000 rand. Therefore, we'll calculate our interest on fixed deposit. What is our rate? 8%. We'll calculate the interest on fixed deposit before and also after an increase. Before we increased our amount, we invested 25,000 rand. Therefore, we'll say 25,000 rand. Multiply by the months, multiply by the rate, multiply by 8%. Multiply by 200, multiply by the months in which we had invested our thing for. We invested it for 8 months. Therefore, multiply by 8/12. Multiply by 8/12. And then we'll get our interest on fixed deposit. So 25,000 multiply by 8%, multiply by 8/12. And then we'll get our interest on fixed deposit before an increase. Multiply by 0. Multiply by 8/12. And then we get 1,333. All right. Did you also get that value?
Yes.
And then calculate after an increase. After an increase, we did not have 25, but then rather we had 55,000 rand. So we'll say 55,000 multiply by rate. What is your rate? Multiply by 8%. And then after increase, it was how many months? It said that after an increase, it was 4 months.
4 months.
Multiply by 4/12. And then we get our thing after an increase. So let's get it. 55,000 multiply by 8%, multiply by 4/12. Then we get more like 1,466,
Yes.
667. And then for us to get the total interest income for the year, we'll add both of this amount. We'll say 1,466,667 plus 1,333. And then we'll get our interest income for the year. Please, let's add them. Let's add those amounts. And then I think we'll get 2,800.
Yes. It's right.
So 2,800 so interest income for the current financial year. Interest income for the current financial year is 2,800. So Tina, you recorded the interest income that are supposed to be recorded for this year. It's our final answer for interest income. So in your interest income, you already got your final answer. As your interest income. You'll write it here. 2,800. 2,800. The interest income that you normally calculate is normally your final answer. So here, now in our brackets, we had recorded 2,200. So we'll check the difference between the two amounts. We'll say 2,200 minus 2,200, in which you'll get 600. So 600, you'll edit here. So Tina, in their trial balance, they had recorded a less amount. Hence, you have to look for the difference between the two amounts, in which you get 2,800. In which you get 2,800. So remember, for interest income, you will always have to calculate the one that is okay, or the one for the current financial year in which you have dealt with. And then for insurance, what do you remember about insurance? Kind of what do we have to do about insurance? In our insurance, remember that you have to draw up two financial. In our insurance, remember that you have to draw up two financial years. The first financial year that we have to draw is for business financial year. Business financial year, let's draw it. Our business financial year begins in the first of, the next transaction talks about insurance. It begins on the 1st of January, and then it ends on the 31st of December. Let's read our insurance. Insurance included a policy with a yearly premium of 9,000 rand, 9,900. It was paid for a period of the 1st of August 2021, and it expires on the 31st of July 2022. For insurance, the insurance financial year is not the same as the one for business financial year. Our business financial year begins in January and then it ends in December. But then for insurance, a little bit different. They told you that it begins in August. It begins in August. And then it ends when? You say 1st August. Financial year of insurance, 1st August. And then it ends when? On the 31st of July. Why am I drawing up two financial years? Why would I waste my time drawing up two financial years? The one reason in which you draw up two financial years, we will look for the months in which they were not supposed to be paid for, meaning prepaid expense. We will look for those months in which they were not supposed to pay for. So the business financial year begins in January and then it ends in December. But then for insurance, a little bit different. Let's use a different color, maybe blue. So we can clearly see that our business financial year ends in 31st of December, meaning for insurance, we were only supposed to pay from August up until December. We are only supposed to pay for this period, from August up until December, in which is 5 months. Tina, for insurance, we're only supposed to pay for 5 months. It's 5 months for August to December. Let's count it with our fingers. It's August, September, October, November, December. It's 5 months. So meaning for insurance, we're only supposed to pay for 5 months. Meaning this period, from January up until July, this period, which is 7 months, this 7 months, you call it prepaid expense. You were not supposed to pay for it. Why were you not supposed to pay for it? Because it does not fall under our financial year. So what are you going to do? Your insurance premium that you paid is 9,900. This is the insurance premium that you paid for the year, 9,900. But then we know that in that 9,900, the insurance premium for 7 months, it was prepaid expense, meaning does not fall within our financial year. How are you going to do that? We'll say the easier method, you can see 9,900 multiply by what I want over what I have. I'm looking for the one that was prepaid. Multiply by 7 divided by 12. And then you'll get the one that was paid in advance. So let's calculate it. We'll say 9,900 multiply by 7 divided by 12. And then you'll get 6,600. Meaning in your insurance, you're supposed to minus 6,600. Or alternatively, someone would say that, okay, for the year for insurance, I paid how much? Okay, 9,900. And then I'll say divided by 12. Why am I dividing by 12? I want to check how much was I paying towards insurance each and every single month. And then that person will say 9,100 divided by 12. And then we'll get 825. And then they will say, okay, I was paying 825 each and every single month towards insurance. How much was prepaid expense? Meaning how much was the months in which they were paid in advance? Okay, 7 months were paid in advance. Therefore, we'll say 825 multiplied by 7 so that I get the value for those 7 months. And then you will still get 6,600. That's for insurance. You'll still get 6,600. So hence I said that there are two methods in which you can calculate it. It will just depend on you. Go to which one do you prefer using. But then I prefer using the number one formula because time is not in our side and also time is essential. So we'll have two short things. The other one we have to divide and also multiply. So which
Okay.
might be a little bit time consuming. So in our insurance, minus 6,000 minus 6,600 here. And then let's get it. We'll say 26,500 minus 6,600. And then we get 19,900. And then let's go to the other transaction. The business sells a plastic bag to its customers at 50 cents each. Okay. The profit or loss on the sale of plastic bags reflects the following. Cost of plastic bag purchase, 51,200. Cash received from the sale of plastic bags. After we sold our products, we received how much? 56,600. Meaning 56,600 is more like our sales. And then the business uses a periodic stock system for plastic bags. No entries have been made. They gave you reversal of stock on hand at the beginning of the year. It's 5,700. They gave you the value of stock at the beginning of the year, meaning it's opening stock. It's 5,700. Bags bought on credit, 12,800. And then also they gave you stock on hand. Our stock on hand, it was 3,600. Why would they bother themselves by giving us these things? They say that we should calculate the profit or loss that we did when we sold our things. They gave you a markup. No, they did not provide you with a markup. But then you know that there's an alternative method in which you can calculate your cost of sales. What is that alternative method of calculating your cost of sales? You say opening stock, your opening stock plus your purchases. The stock that you bought, you can buy either on goods or you can either buy on cash or credit. Plus your carriage and purchase if ever you have it, plus your carriage and also plus your import duties and so forth. Minus your what? Minus your closing stock. And then you'll get your cost of sales. Meaning with this information that they provided us with, we will have to calculate our cost of sales. You'll have to check your opening stock. How much is your opening stock? We said that our opening stock for the year, it amounted to 5,700. Therefore, we'll say 5,700 plus your purchases, the stock that you bought. The first purchases that you made is this one, 51,200. Therefore, you said plus 51,200. Right? And then the second purchases that you made is this one. You also purchase on credit. We'll say plus the second purchases that I made, but then it was on credit, plus 12,200. Do you have your carriage and purchase there? You don't have it. Do you have returns? You also don't have your returns. You know that your returns, you also minus them. Do you have a closing stock? I do have my closing stock. So I'll minus 3,600 there. Therefore, we'll have your cost of sales. So we'll say 5,700 plus 51,200 plus 12,800 minus 3,600. And then we'll get your cost of sales as how much? Our cost of sales is 66,100. Please confirm it. Did you also get 66,100? Say 5,700?
Yes.
Okay. And then they say that you should calculate profit or loss that we made. How much was your sales? It was 56,600. We'll say 56,600 minus your cost of sales minus 66,100. And then you can clearly see that we did a loss here. We did not make a
Yes.
profit. Yeah.
Sibayizile.
Hayi khona sibayizile.
Udla imali. Udla imali.
And then our cost of sales, our loss. Our loss on the sale of plastics is 9,500. You also get the same amount.
Yes.
So under expenses, we did a loss. You'll write loss on the sale of plastics bags. Hayi khona.
Kuyabheda. Straight.
Kuyabheda. And then you'll write 9,500. Are they? It's more like a waste. We wasted our money there. We're donating. Maybe next thing in order for them to be profitable. I think our plastic bags costed 50 cents. We sold them with 50 cents. Maybe they should increase the price. Maybe sell our plastic bags with 1 rand this time.
Yeah.
With 1 rand.
Please.
And then depreciation. Depreciation. For depreciation, let's write depreciation. Remember the method of calculating depreciation? That one
Yes.
that one that is long and boring, but then the one that will give you is long and boring. I know. That's what you normally say. No, man, this one is boring. And then at the end of the day, it will give you correct figures. Depreciation for vehicles, they did provide us with depreciation for vehicles. It's 138,000. Wow.
Yes.
Depreciation for vehicles is 138,000. 138,000. You have to calculate the depreciation for equipment. This one you will tell me, Kuti. Swinza Ganja. Remember, you have to calculate depreciation for bought, sold, and all the remaining. Let me zoom this for you. Let me zoom this. That is a transaction for depreciation. They say that depreciation must be written off on equipment at 15% per annum using the diminishing balance method, using the carrying value method. Take note that equipment with a cost price of 18,000 rand and a carrying value of 12,000 rand on the first day of the financial year was sold to Sobia
Yes.
for 4,000 rand. No entry has been made of any of the transaction. You have sold them. You'll write the 3 steps. What? Bought, sold, sold, and also all the remaining. Bought, sold, and also all the remaining. For bought, basically you do not buy anything, right? So the depreciation for bought will be 0. What about all the remaining? For all the remaining, what did they say there? They say that depreciation must be written off on equipment at 15% using the diminishing balance method. Take note that equipment with a cost price of 18,000 rand and a carrying value of 12,000 rand on the first day of the financial year was sold. So you'll have to calculate the depreciation for sold. Which method are you supposed to calculate? The one that you're supposed to use. You're supposed to use the carrying value method. Already they gave you the carrying value of your thing at the beginning. At the beginning, we had a carrying value for asset. So the carrying value of it was 12,000 rand. So there was no need for you to calculate your carrying value as they provided you with it. You say 12,000 rand, multiply by your rate. What is your rate? 15%. Multiply
Yes.
by the months in which you used your asset for. Multiply by the months in which you used your asset for. We used our asset up until September. We sold it in September, right? We sold our asset in September. Therefore, we used it up until September, meaning we used it from January up until September. So we'll calculate the months: January, February, March, April, May, June, July, August, September. So we only used it for 9 months. So we'll have to calculate the depreciation for only 9 months. Multiply by 9 over 12. And then we'll get the depreciation for sold. So say 12,000 multiply by 15%, multiply by 9 over 12. And then we'll get the depreciation for sold, in which it will be 1,350.
Yeah, boo.
And then you go to your older remaining. Older remaining, this is the asset that you used for 12 months. This is the asset that you use for 12 months. For older remaining, this is the asset that you use for 12 months. So the key word that you should know there is that they say that no entry has been made of any transaction, meaning after we sold our asset, you do not minus its cost and so forth. So what do we have to do there? You'll have to calculate. Remember, let's go to a trial balance. Let's go to a trial balance so that we calculate the older remaining. Older remaining, as we have said, this is the asset that's stayed in our business for a period of 12 months. What's happening? So you have your cost price of your equipment at the beginning of the year. Our cost price amounted to 208, right? But then this is the aggregate cost price. The 280,000, and this is the aggregate cost price, meaning it includes the